With TQQQ's insane performance the past decade, I mean, guys, literally this fund would have turned 10 grand into over $1 million. A 13,518% gain at the time of this recording. More people are looking at this fund to see if it fits a long-term buy and hold strategy to increase their net worth rapidly. 10 grand into $1 million is not a bad deal. But we need to see, is TQQQ fit for a buy and hold strategy, or is it only fit for short-term trades because the market's just been going up only right now? So let's explore these questions in this video. But as usual, none of this is financial advice. Literally none of it, guys. I'm not a financial advisor.
Knowledge.
So let's just go over the basics of TQQQ. TQQQ is a triple leveraged ETF fund following daily price movements of QQQ, the Nasdaq 100. All this means is if QQQ moves 1% in a day, TQQQ moves 3%. If QQQ moves minus 1%, TQQQ moves minus 3%. So this is a 3x exposure on a daily time frame. With this increased leverage, there's also a higher expense ratio to hold this fund. At the time of this recording, if we scroll down on TQQQ, we can see there's a net expense ratio of 0.88%, the gross expense ratio of 0.98%. So why would you consider investing in TQQQ with these very expensive expense ratios? We've seen multiple times TQQQ has dropped massive amounts. This last time from 2022, we saw the fund drop 82%. And it's dropped a huge amount, and it hasn't ever recovered to all-time highs despite QQQ being at an all-time high. We can see TQQQ has not met that there yet. And there's been multiple times, guys, we've seen this fund drop 70%. We can see COVID was 70%. We can see here in 2018, there's another 56% drop very quickly. This ETF is really a lottery ticket to huge gains. Since inception, guys, it's been 13,518% at the time of this recording on 5/7/2024. 10 grand into $1 million, so just remember that. That's a huge return in 14 years. So these returns attract many people, even myself, to wonder if it's insane to hold this ETF in our long-term bags, even with the insane drawdowns of 70% all the time. And we need to keep in mind, though, investing in TQQQ is betting on the Nasdaq 100. So you need to evaluate your current stance on the Nasdaq 100. Do you think big tech, the Nasdaq 100, will keep rising? Do you believe in the power of the 100 largest companies? Do you believe in the American economy in general over the next decade plus? If you said no to one of these, it's unlikely a position in TQQQ would make sense for you if you don't even believe in QQQ. So just keep this in mind. But we need to go over a couple of scenarios if it isn't already clear to you guys. Lump sum investing is definitely not the way to go with TQQQ. It gives you a huge risk. I mean, even at the current price, if you invested back in July of 2021, you would still not even be at break even. And this is almost 3 years later at this point. If you invested before July 2021, yes, you'd be at break even, but you'd still be down even if you invested 3 years ago. And the question is, how does this make sense? QQQ is at all-time highs. If I put it alongside with the chart with it, we can see QQQ in the orange is above its previous highs. This makes sense because there are gains required to make up for losses. So if we have a 70% loss, we need a 233% gain to make up for that loss. And it gets even worse. At 80%, you need 400%. And 90% loss, you need a 900% gain to make break even. And with TQQQ, there are many. The past loss was about 80%. So we're going to need a 400% gain to get break even, just about. And we can make this make sense on the chart as well. If I start at the bottom and go all the way to the top, you can see 400% is right about at the peak right there. So you need a large gain to make up for the loss. So this means QQQ needs a large bull run to get TQQQ back where it was. And knowing this also leads us to be concerned with volatility decay. If you look on this chart, if QQQ chops sideways for a sustained period of time, it just moves sideways. This is the underlying ETF and the blue. If you do nothing, you just lost opportunity costs, and that's really about it. With leverage ETFs, if it chops sideways due to you needing more gains to make up for the losses, in a sustained sideways environment, it tends to lead to the ETF chopping downwards. You can see 2x leverage ETF is a slow chop down, 3x is a very quick chop down in a sideways market. So it leads to that concern if QQQ starts to move sideways over a sustained period of time. Now, if we jump back to lump sum investing, of course, if you lump sum invested at the bottom, guys, you'd be doing really handsomely. At this time recording, there'll be like a 250% gain. But really, good luck timing the bottom right there. I think most reasonable people, maybe people aren't reasonable, but I think most reasonable people would agree lump sum investing in TQQQ is a dangerous idea. Even if you made a rule of, I only lump sum invest when TQQQ is down 70%, this past bear market, you still would have experienced something terrible. If we go down 70% right here at $26, even if we put our investment at $26, you still would have had a drawdown of 40% from there. So yes, you would have been handsomely if you invested from there, but you would have had a long period of a 40% drawdown, and that's very difficult to manage psychologically. So timing is really not your friend on this fund. It's very difficult to time. Even if you did a rule like that, you would sometimes not get entries, and then other times you get entries but still have a 40% drawdown. So what if we took a different approach and DCA'd instead? Let's compare DCA investing into TQQQ versus investing in QQQ, and let's say we started investing in January 2022. This will give us the COVID crash, the 2021 bull run, 2022 bear market, and then the 2023 recovery since then. So here on Portfolio Visualizer, I'm going to show you the back test. We're starting in 2020 of January, going to the end of the current time, which is May 5th, so it'll probably end at the end of April. We're going to start with an initial amount of $100, and we're going to contribute $50 per month. Portfolio 1 is 100% TQQQ. Portfolio 2 is 100% QQQ. So we can see the results. And I chose a small initial amount. You can do this for yourself if you want to compare, because in the video, lump sum investing is not a good idea, right? So we're going to slowly DCA in, but I just put an initial amount of $100 just for a little extra boost in the beginning. So when we check the results, we can see we started in January 2022. And you can see QQQ, the orange, is growing slowly, steadily. Yes, we had the dip, right? We had a drawdown, but it's not as large as TQQQ's, which is the blue. Now, TQQQ is on top. It's on top, and you had 139% gain since you started DCAing in versus 131% gain with QQQ. But the max drawdown is very different. It's 80% with TQQQ, which is why QQQ looks like a smooth ride. It looks like a smooth ride because TQQQ is so volatile. And you had a 32% drawdown with QQQ. And you think it would be better. Since inception of TQQQ, it's up over 13,000%, right? But there really needs to be a long, sustained bull market to get TQQQ moving, unless you're buying right at the bottom, which is basically what would have happened if you bought at the beginning of TQQQ. If you bought within this time period, you would have bought the bottom and you would have been doing great. So TQQQ takes a long time to outperform if you're DCAing in, and it will outperform, but you really need a sustained bull run. You can't lump sum invest. If there's not a sustained bull run, it's not going to work out for you, as the backtest shows. Let's say, we are a little more aggressive. We're doing $100 per month. Let's say we dumped 1,000. Why not? Let's just see what happens. You can see we have something similar. Large COVID drop, TQQ outperforms. Then we have 2022, TQQQ goes below, even if we're DCAing, and then it slowly ends up on top with the DCA, but you still have a large drawdown. 79% versus 32 for a couple more percents versus QQQ. So this is with 3 recent bear markets. What if we did it since QQQ's inception though? We're just going to scroll all the way back and see what this would have looked like. Since inception, your final balance would have been very different with TQQQ. $475,000 versus $80,000, but you still have a large drawdown, 80% minus 32%, right? So TQQQ can make sense, but it has to have a large, long, sustained bull market for it to make sense if you're going to buy and hold TQQQ. So what does this really mean for TQQQ? Yes, you can DCA into it. It would still give some decent results on a very long time horizon, but maybe not on a short time horizon without a sustained bull market. But we shouldn't discount it because it can provide explosive gains, as we can see with the max all-time percentage return. And those are huge gains, just a discount like that. So TQQQ cannot be your main holding in your portfolio, or you're along for a very bumpy ride. If you bought 3 years ago, even June 2021, you still would have been down at this point. So if you want to hold TQQQ, you should probably combine it with something else. Some people recommend bonds. Currently, you could just hold some TQQQ in cash with like all the 5% savings accounts right now. I have one at Robinhood if you want to sign up below. But I have an amazing portfolio that uses TQQQ, there we go, and one other stock, and it actually has better drawdowns than QQQ alone, and it provides better returns using this 2 ETF portfolio. Make sure to check out that video right here. Thanks.